Hello and welcome to the week ahead from the Financial Times in London. Here are some of the big stories coming up this week. The Rio Olympics finally begin after months of problems. Another Rio Tinto, will be under the spotlight about its new strategy. And US and UK central banks could be heading in opposite directions on interest rates. First, the Rio 2016 Olympics will finally get underway with an opening ceremony on Friday night, after months of hand-wringing over whether the beautiful but chaotic Brazilian city would be ready for the world's biggest sporting festival. Brazil's economy is facing what is expected to be its deepest recession in a century, and its president, Dilma Rousseff, is being impeached for allegedly manipulating the budget. State governments like Rio are near bankrupt. There's a health scare over the mosquito-borne disease Zika, and Olympic athletes fear the dirty water in the bay is a health hazard. And then there's the danger of terrorism, with authorities detaining a cell of Brazilian sympathisers of the Islamic State. Joseph Leahy, our Brazil bureau chief, has been taking the mood on the busy streets of Sao Paulo.
Here in Sao Paulo, there are still very few signs of excitement about the Olympics, with only days to go before the Games are due to begin. Indeed, a recent poll found that more than half of Brazilians believe the Games will bring more losses than benefits to the country. The situation is slightly more balanced in Rio, where people can see some of the public works that have gone into the Games. Indeed, it will probably only be once the Games actually begin that we will have a true picture of how Brazilians feel about the event. During the World Cup in 2014, it was only after kick-off that people became more engaged.
But none of that has deterred Rio's Mayor Eduardo Paes from proclaiming that Rio, no stranger to staging big parties, will be hosting the most fun games in history. Next to minor Rio Tinto, where new chief executive Jean-Sébastien Jacques delivers his first set of results on Wednesday. Mining stocks enjoyed something of a rebound in the first half of 2016 amid brighter commodity prices, but earnings are still subdued. Investors will be more interested in any hints of a new strategy from Mr. Jacques, focusing less on cost-cutting and more on long-term growth. James Wilson, FT mining correspondent, has more.
Well, I think investors will want to know where he plans to up the investments in Rio. Obviously, it's a good chance to be buying commodities near the bottom of the cycle if Rio can pull off some deals. But assets are not easy to come by at the moment. There's some very reluctant sellers out there. But I think investors will want to know whether he has any plans to increase investments in, say, copper or the diamond business. And they'll also be looking to see whether there's any sense that Rio will be able to sort of pay a bigger than expected dividend at the end of the year. They've already said the dividend will take a big cut, but at least they're still paying one. And with commodity prices having been quite supportive in the front half of the year, there's a likelihood perhaps that they might be able to sort of increase the payout when it comes to next year. So I think investors will look for a hint of that.
And finally, we'll have a clearer picture of very different economic situations in the US and UK this week. US jobs data on Friday is likely to show June's strong growth continuing. With the US economy at or approaching full employment, the pressure could be increasing on the Federal Reserve to raise interest rates. In the UK, the Bank of England is widely expected to cut the benchmark rate on Thursday by 25 basis points, in light of the UK's decision to leave the EU. There's been more weak data since the bank decided to keep rates on hold last month, and growth figures will probably be revised downwards. Chris Giles, FT Economics editor, sees the US and UK central banks going in opposite directions.
Payroll figures in the US are the key things for the global economy because that's going to determine whether the Federal Reserve raises interest rates again this year. If they're strong in July like they were in June, then I think we might see a US interest rate rise maybe as soon as September. If they're weak, then I think it'll be put off maybe not at all this year. That's what the Fed said last week. In the UK, things are going in the exact opposite direction because of the uncertainty caused by the vote of the UK to leave the European Union. We can expect almost certainly the Bank of England to come out with pretty negative forecasts, cut interest rates from their already low of 0.5%, and probably come up with another package, maybe restarting quantitative easing, pumping more money into the UK economy to try and mitigate the Brexit downturn.
In the US, the Federal Reserve will also have to assess leading indicators for manufacturing and services in July, which are likely to be strong, pointing to growth rather than contraction in the US economy. And that's what the week ahead looks like from the Financial Times in London. See you again next time.